Good morning, everybody. We've got a mixed trade in the grain markets here early on Thursday morning. It is 6:30 a.m. Central Time. December corn futures down a half cent at 568 and three quarters. January soybeans up 2 and three quarters at 12.19 and a half. December Chicago wheat down 1 and a quarter at 801 and three quarters. December Kansas City wheat up a quarter cent at 817 and three quarters. December spring wheat up 7 and three quarters at 1054. If you guys are listening on the podcast, appreciate it. If you're watching on YouTube, subscribe to the channel, like these videos, help me out to grow this thing. My goal is to get to 5,000 subscribers. I know that we can do it, so help me out there. If you need some additional assistance, go to my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner for $49.99 a month. I've got a subscription service that you should certainly check out. You'll get my morning email, my text message service, my subscriber-only videos. I really get into depth in regard to grain markets, grain marketing strategy, all of that sort of stuff. So if you want to know exactly what I'm doing and what I'm advising every single day, check this deal out. This is a monthly subscription. Cancel at any time. No other fee, no other obligation. Won't try to sell you anything else, I promise. We've got some rains moving across the Corn Belt and really good chunk of the country here this morning. You look at the radar, you've got a really wide band that goes all the way from the U.S.-Canadian border down through the Gulf almost. And I'm not sure that the amounts here are going to be fantastic, but this is something that could halt field work and harvest activity in some areas. Over the last 72 hours, a lot of Iowa and central Iowa in particular caught some rain. A lot of these areas of central Iowa caught certainly more than an inch of rain, some up to maybe an inch and a half. Missouri caught some rain, eastern Kansas, eastern Oklahoma, east part of Texas, Minnesota caught some rain, a little bit of North Dakota, a little bit of South Dakota. So that system that is on the radar here this morning, it's going to work its way east and out of the eastern Corn Belt by late in the day tomorrow. And the amounts out in like Illinois, Indiana, Ohio should not be significant. So a little bit of rain on the radar here this morning. I don't think this is a big deal. U.S. ethanol production declined last week. Weekly output 1.039 million barrels per day. That was down more than 6% on the week. Now you got to keep in mind we were coming off a near record high the week prior. This is still a really good number. That weekly ethanol production number was up 6.3% versus the same week last year, up 1% versus the same week in 2019. The one big positive factor here is that we are using ethanol. Ethanol stocks increased just marginally on the week. They are the second lowest seasonally in the last 5 years, and that implies that demand for ethanol itself is very, very strong. Production margins for ethanol producers across the Corn Belt and across the country are phenomenally strong. I mean, they're making more than $1 per gallon in a lot of instances, and that should inspire this strong ethanol grind to continue, and that is a positive factor for the corn market. Russia may revise its floating export tax on wheat if prices continue to rise. They're currently using a system in Russia that was imposed several months back. They tax 70% of the difference between the export price and $200 per ton. So last week, the export price was about $300 per ton. So the formula works like this. They take 300, they subtract 200, you're taxed at 70% on that 100. So the tax would have been $70 per ton last week, just as an example. This is what the Russian ag minister said. He said, in the event of a significant increase of the global prices, let's say up to $400 per ton or more, the formula for calculating the floating export duty would be revised upward. So the government would essentially increase taxes on its wheat exporters if these prices continue to rise. And that's a factor that could ultimately make our wheat here in the United States more competitive on the global market. Russia is the world's largest exporter of wheat. Now, most of their wheat goes to the Middle East and Africa and places like that. But in any case, it's a deal that could drive some more business to the United States. These taxes in Russia and things that we've seen in other countries, they're all in an attempt to curb food inflation. Everybody's concerned about inflation, and this is one way that Russia is going about it. Now, speaking of inflation, we had CPI data out yesterday, and inflation is really getting kind of sticky here. 6.2% is the annual change in CPI, and that is the highest rate since 1990. And the biggest driver here is energy costs. Energy costs are up 30% year over year, according to this CPI data. And CPI tracks the measure of a basket of goods and services to urban consumers. Now, they say energy costs are only up 30%, yet retail gasoline prices are up 62%. They said that food prices, I believe, were only up like 5% or something like that. I am fairly certain that food prices are in reality up more than that. You got to think to yourself, how much buying power have your dollars lost in the last year? I would make the argument that it's more than 6%. But it's different for other people, and certainly the urban consumer, which is what this tracks, is much different than the rural consumer, which is, I would imagine, what most of my viewers and listeners are here. So it's a little bit different. But in any case, inflation by the CPI metric running at its fastest rate since 1990, and this is continues to be a big concern for the general public, for the government, all sorts of different people. Tomorrow is last trading day for November soybean futures. Make sure you take a look at any remaining open positions that you have there. Export sales are delayed until tomorrow due to the Veterans Day holiday. The veterans out there, thank you for your service. The cattle market was mixed yesterday, kind of a mixed bag in fat cattle. Feeder cattle were lower, and the feeder cattle market has not liked this higher trade in the corn market. Now, in the cash market, in regard to cattle, it looks much better. 132 bids in Texas, 131 in Kansas. So you should see some cash cattle traded at those levels at the bare minimum here this week, I would imagine. There were some cattle traded on the Fed Cattle Exchange at 131. In the outside markets, the U.S. dollar is very strong. It's up again here this morning. The S&P is up 16. The Dow is up 40. The bonds are flat. Gold's up $12. Crude oil is down 59 cents. And the December WTI 80.75 last trade there. Everybody have a great day. I'll talk to you guys same time tomorrow.